All right, guys, back to work. Weekend's over. I know it always goes by too fast. With the final week of October, though, right in front of us, let's make the most of it, right? Finish up the month strong here. It's Monday evening. It's October the 25th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me tonight. My job tonight is to help us fund the best trades, setting up for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys tonight. Charts are already in the background, as you can see. Got the S&P, got the Nasdaq, and we got some oil on our radar for tomorrow. Got a bunch of great trades setting up. Had some nice big moves this afternoon on the E-minis. Will the buyers keep this party going to the upside on the Nasdaq and the S&P? Get some great trades setting up on the Nasdaq and the S&P in both directions for tomorrow. Maybe some reversals off of this high. We'll go to details here in this video. Over on the oil tonight, oil, boy, I'll tell you, at first glance, oil looks really nice for a short right now, but if you look deeper onto that chart tonight, you'll see why I'm looking for a retest. Those highs are going to buy this dip for tomorrow on the oil. Not to worry, by the end of this video tonight, you'll know my favorite trades for tomorrow, right? My favorite entries and exits. You'll also know some stuff to avoid tomorrow to keep yourself out of trouble and keep yourself in the green, whether you're trading on your own or whether you're trading with me tomorrow in our morning trading session. Before we jump into tonight's video, though, as always, make sure you subscribe to our YouTube channel. I publish the good stuff on this channel every evening with my best trade ideas. Make sure you subscribe, hit that little bell icon because a lot of this stuff is time sensitive, right? So subscribe to the channel, hit that bell icon to make sure you always get notified every time I publish something new. If you guys have any questions, drop those questions for me in the comment section, and I really appreciate you guys carving some time out tonight. Hit that like button if you guys enjoyed this video as much as I enjoyed making it. But enough of the intro, though. Let's get this thing going. Tuesday is right around the corner. Got a lot to cover here tonight in this video. Like I mentioned, last week of the month, right? Final week of the month is usually filled with fireworks and great trading opportunities. So I want to make sure we get after it, get you guys ready for the rest of the week here. S&P and Nasdaq are obviously very bullish right now. You probably saw it today, right? Very bullish on the S&P and the Nasdaq. We got some open loops in the charts, right? We're way up here right now, right? So big, strong run up. We retest. Really, both the S&P and the Nasdaq are really at major turning points right now. Do we break out and go higher? Get some breakout trades to buy as we go into tomorrow. Do we reverse and collapse back down? Got some beautiful reversal trades I'm watching for as well. And then let's not get too far ahead of ourselves. We may just simply get a pullback, a trap, and another leg higher here. So how will we know if we should be selling the pullback or buying the pullback? We'll talk about all those details tonight on the video so you can know when it's time to get short and when to stick to the long side. But as you can see, there's plenty of really good trade setups on the S&P, the Nasdaq for tomorrow. We'll go into more details here in a second. And as I mentioned in the intro, right, we're over on oil here tonight. At first glance, it looks like, this will be a great little trap high up there. And it might still end up being it. But I'll tell you, when you look at where we are on the chart right now, it's a little bit difficult to want to short this thing right now. I'd love to be a buyer on the oil, but as you can probably imagine, right, a lot of momentum for the bears. So we do have to be careful as we trade the turn going higher here. I'll tell you right now, if this is your first video newsletter you're watching tonight, you're going to want to stick around for oil because I'm talking about how to trade rotation on a range-bound market. There's a lot of great lessons to learn there and probably some pretty good trades setting up for tomorrow as well. So S&P, Nasdaq, oil, we are ready to go. Glad to see you are ready here as well. Before we jump in and talk about the setups I'm tracking for tomorrow, real quick, let's just make sure we're all on the same page because, again, as I mentioned, we're going to the end of the month. We do expect there to be an uptick in volatility this week. It's really like clockwork. The final week of the month and the first couple days of the following month, which, dare I say, is the month of November next week. Can't believe we're already thinking about Halloween this coming weekend. It's incredible how fast 2021 has blown right by. But nonetheless, though, end of the month, we do expect there to be some increased volatility. So just be aware of that. We'll talk about how we use the ATR indicator tomorrow morning morning in our trade room to make sure we're adjusting for that increased volatility. We'll talk more about that tomorrow morning in the trade room. Tomorrow, of course, we've got some big news tomorrow, right? Pretty much everything piled on there at 10 o'clock Eastern time. Got some home sales. We get some consumer confidence numbers at 10 o'clock. Chances are that's going to be your big news of the day tomorrow. And really, that's the smallest news of the rest of the week, because as we go deeper into the week here, we got some durable goods and trade on Wednesday. We got some GDP and jobs on Thursday. And then arguably, once again, the biggest news of the week is probably coming on Friday. We get the ECI, the personal income, and the Chicago PMI on Friday. So we really have, again, don't get me wrong, right? Tomorrow's 10 o'clock news is no slouch, but you compare that to the durable goods orders, the big GDP number coming out, and that personal income number on Friday. Just you know it, right? As we go into the end of the week, we go into the end of the month, we get some big news coming. So as I always tell my clients, don't spend those bullets the wrong way this week, right? Save that ammunition, because you want to keep it for the good stuff, which we'll definitely find some good trades tomorrow, but don't be forcing trades. Don't go blowing your account tomorrow forcing trades. We got a lot more good stuff coming later on this week. And of course, tomorrow morning, we'll be trading this stuff together in our trade room. And hopefully I'll see you there at 8 o'clock Eastern time. Let's keep this party going. Let's keep this party going though, right? News is pretty simple. 10 o'clock news tomorrow. That should be the big catalyst. And remember, we're not trading the news, right? I could care less what the actual news says. We're traders. I assume if you're watching this right now, you're a trader like I am. And if you're a trader, the news means nothing. All that matters is, how does the market react to it, right? It's all we're watching tomorrow, 10:05, 10:10, 10:15. I'll tell you, whenever there's 10 o'clock news, I always get excited for that 10:10, 10:15, 10:30 trade. So you definitely want to be at your desk tomorrow morning in my trade room with me. 8 o'clock Eastern time, we open up, and definitely be paying attention there. 9:45 into 10 o'clock, so you're ready for that 10:10, 10:15 trade tomorrow morning. We'll talk more about that tomorrow once we get there. Let's talk about the game plan. S&P, Nasdaq, and some oil here tonight. Still seems kind of funny to say the word crude oil in this video. Again, it's been a long time since we've had oil on our radar here. Good to have it back here with us. Let's jump first, though, into the S&P. The S&P, the E-mini, S&P and the Nasdaq are going to be very much interchangeable tonight. So a lot of what I'm talking about on the S&P will be applicable to the Nasdaq. You'll see there are going to be some key differences, right? For example, I get a range on the S&P. There's no real range yet on the Nasdaq. S&P is a lot more space to run. The Nasdaq doesn't really have as much space to run. You'll see what I'm talking about here once we get deeper into this video. What's going on right now on the S&P right now? How would you describe this market? I would say we began the week pretty much kind of chopping around at the range, right? Had that range from last week. And then, of course, this afternoon, the market finds some legs and starts to roll, right? Starts to really run up off of that low. We, of course, make a very strong run higher. Anytime we see a real strong run in one direction, we know the odds are very, very good. We're going to see a pullback and a retest of that high. We call these open loops, right? Anytime we see a strong move in one direction, it's almost like it leaves unfinished business, right? And buyers will come in and try to buy off support levels such as a channel, right? Support levels such as a sloped trend line there. We can definitely see buyers were eagerly waiting when you had that big strong push, right, to get that nice steep pullback off of support levels to retest the high. Now, where do we go from here? That's the big question. Where do we go from here? At this point, the buyers, of course, have kind of completed their mission, so to speak. They have, of course, retested that high. There's no sense of urgency anymore. There's no sense of scarcity anymore, at least not yet. And so we have to wait and see where we go from here. If the market pushes higher, I've got my measured move objective going higher there, right? We assume that 78.25 area will likely be where these buyers want to go in the short term for tomorrow. We may also see this range start to play in, which I think is a really big kind of variable for tomorrow. We'll talk about how that's important as well. And of course, if we go lower, you have to assume now that this area, right? This is the prior right? That's kind of the prior high area of that range. You have to assume the buyers would love to buy off of that. Okay. And then you also want to assume too, if this was to really start to push going lower, that range down there is a huge magnet. And so we assume that range will be an objective for the sellers. All right. So the bears want to go back into that range. The buyers want to keep this party going higher, complete that measured move. We may get stuck inside this range here, right? That's going to be the one big kind of question mark here right now. So what would be some ways I could buy this market? Because we're definitely bullish, right? How do I buy this market right now? There are a couple different breakout patterns. I'll go over a couple of them here, and we'll talk about some more on the Nasdaq. So make sure you watch the entire video tonight, because I'm not going to go over every single possible scenario on each chart, but I'll go over a couple here. I'll do some on the Nasdaq. We'll do some on the oil, and you can see how we can apply breakout patterns. When it comes to breakouts like this, I think one of the easiest breakouts right now, because of this range, would be that pop and pullback, right? Basically a breakout pullback. So we see that strong breakout. This resistance now acts ultimately as a support, right? That resistance now acts as support. And then what happens is moving average comes over. We pull back underneath the moving average. The bears, of course, right? They oftentimes will try to get short going back into that range. And once they do, we know exactly where their stops are, and we can trade, again, kind of a breakout pullback. Now, I know a lot of people love breakout pullbacks. I don't trust the first kind of bounce off it, right? I like to get it up, get it underneath the moving average, get the bears to come in and try to take it lower. What that does is it gives us all their stop losses. Their stops are sitting right above that high. Nice strong candle. Bam, we can buy right into their stops to finish off that measured move. That would definitely be one of my favorite breakout patterns going higher here. Another one of my favorite breakouts going higher would be basically a 1-2-3 breakout, right? A 1-2-3 breakout. In other words, we break out, we pull back, and we jump. At that point now, we draw our channel off the high, we find our new channel off the low, and we buy the first test. Now, the first test of this channel, I'm not going to blindly buy it, right? This is a 6,000 tick chart, keep in mind. I'm going to drill down to a faster time frame, and we'll talk about this a little more as we go deeper in this video. My two favorite entries off the low of that channel are what we call trap setups and failure setups. These are my favorites off the low of that channel. All right, so 1-2-3 breakout. And then again, we're not just going to blindly buy it, right? We'll look for that failure setup, that trap setup. If you've taken my free trading classes, you know what I'm talking about when it comes to these entry setups. There are a couple more breakout patterns. I'm going to talk about those a little bit later on in the video as we go into the Nasdaq. Okay, so make sure you stay tuned for more and keep watching the rest of this video. How do we buy it as it goes lower, right? If it goes lower, well, if it goes lower, what's the problem going to be? The problem is going to be momentum. Again, we've got this, the buyers have all the control right now. Big pop up, they retest the high. If we go lower, what does that tell me? That tells me the buyers want lower prices. It's just rejection. It doesn't mean this is a bear market yet. It just means the buyers aren't interested in buying that high anymore. What will usually happen in these situations is that sellers will see this now as being a reversal, and they'll really try to force it and run it back down into that trading range. You're going to see something like this on the oil market a little bit later on in this video. If we pull back off that high now, I would really love to get down in this area here. That would really make me happy down there, because then what we could do is we could rope in those bears. Let those bears try once. Let them try twice, right? Again, we're coming in off that area of support. Right? It's a prior high. It's above that prior range. This is a fantastic support level. The only problem, again, is going to be as it swings over, I would anticipate a lot of bears coming in and trying to run this thing lower here. I'm going to wait for the bears to try twice. Once they try twice, I'm going to use my 2-try failure pattern to grab those stops, buy right into those stops, and then we'll talk more details on this as we go deeper into this video, but we'll then look to trade the turn. Okay, trade the turn. I'm going to talk a lot more about trading the turn on the oil chart later on. But this is kind of a rough idea of kind of what you're looking for here on the pullback. I want to see, it's going to want to be a relatively deep pullback here because again, we have to incentivize these buyers. We have to give them a reason to get in if they don't keep going higher here, right? So I want to find that 1 try, 2 try, rope in those bears with that 2 try failure setup. Again, price action setups. We'll talk about more as we go deeper. And then of course, it's that first test, right? As we trade the turn. Now, you know what? We've talked a lot about the pullbacks, the failures. You know what? I want to give you guys a deeper dive into these entry setups because we're going to cover a lot of these in this video tonight, and I want to make sure you can know what they look like, know what the rules are. Again, I'm not going to be trading this stuff off a 6,000 tick chart. What I'll do is I'll put a lot more. I'll put a link in the upper right-hand corner for you for our free quick start trading class. It's a free trading course on our website, and it's really designed to kind of bring you up to speed with how we determine the type of market conditions, how we find levels of support and resistance, and most importantly, how we triggered those entries using price action, things like failures, traps, pullbacks, strength moves. I provide hundreds of examples of how we apply our favorite setups to our favorite markets inside that quick start class. If your goal is to earn daily income in these markets right now, that quick start class will give you a roadmap to accomplish that. So definitely grab that link in the upper right-hand corner. You're going to love the free course. And that way, the next time that I say, okay, deep pullback, 2 try failure into hidden channel pullback, okay, you're going to know exactly how we take the entries, right? What to look for, the rules look like, how to tell the channel, etc., etc. That's how you want to buy it on the pullback here, all right? How do we sell it now? Okay, we talked about the buy side. The buy side's pretty straightforward. Get a couple breakouts. Got a few pullbacks here. How do we sell this market right now? How do we sell if it goes higher, right? If it goes higher here right now, we are at a great place here to get short. We really are. We're at major resistance. The buyers got their strong run up, but now they've reached their objective. You could even say we've even reached our pendulum swing. The amount underneath the range is equal to the amount above the range. Lots of resistance here. Now, we are definitely bullish. There is no doubt about that. So how do we sell in a bull market? This is where you want to look for what I call a crown reversal setup. Okay, crown reversal. We'll learn a lot more about this in the video classes, but the gist of it is what you want to see is you want to see the buyers try once, try twice, and you want to see a trap off that high, right? Now, these can get really, really good. Crown reversal short off the high, get that nice strong red candle coming in. Then, as we go lower, one of my favorite follow-up trades, pay attention here. This is a really good trade. Mark that low, mark that high, find a trap off the high of that channel. That's some money trades right there. Crown reversal off the high. Again, crown reversal off the high into that trap off that channel. Remember, the first test is always the best test. Okay? Whatever you do, don't make the mistake and try to draw the channel wide like that. The wide channels are not going to work well in that situation because once this thing starts to pivot off the high, everyone's going to want that short right there, right? And of course, we know where the objective is as we go. If we don't get that crown reversal, let's say the market simply moves lower, they hold the pullback, right? And they jump off the moving average. 1, 2, 3 reversal pattern, drill down, mark that low, mark that high, get that first test. And again, right, I'm not just going to blindly sell that first test. I'm looking for a bull trap. Right? Looking for a buyer failure. I love how this could easily line up with that expanding triangle level. Again, pretty easy short there, right? As we come up or come down off of those highs. Be very careful if the market pops up. Be very careful selling into that. You're going to want to see it pop up, retest, and then follow that same game plan, right? Back down again. That's how I want to short this thing, either off the high or as it collapses. One more thing to keep in mind, if we go sideways. Oh, and one more thing too. I've got a couple more of these reversals. We'll talk about that in the Nasdaq. All right, so keep on watching this video. I got a couple more that you can also apply to the S&P as well, because again, you're going to see the NASDAQ and the S&P are pretty darn similar here. So rather than simply repeating myself a million times, I'll break them up and we'll make, we'll keep the video moving here with you guys on the S&P and then of course over the NASDAQ. Don't forget there's a range here. Right, there's a range here. So if we get sucked back into the range right now, remember, stay out of trouble inside the range. That's where good trades go to die, right? Focus on support levels. Focus on support levels. Wait to get into the range. Wait to get out the other end. And that's where, again, same thing, right? Bears once, bears twice, because now you're going to have all of that momentum coming down. The one thing you have to worry about, this is probably the biggest trap you want to avoid for tomorrow if it goes to a range, is we got to avoid that falling resistance trend line. In a lot of cases, when it pulls back after going sideways in that range, there's going to be some juicy trend line right there, right? And what you want to do is you want to try to get above it and use it as support. Now, obviously, right, there's a lot of variations there I can't predict right now, but if we do go sideways here, back inside that trading range, right, we go sideways, then we come back down again, there will likely be that trend line coming down. Okay, you still want to use that 1, that 2, but now get up, over, and go from there. We saw a great example of that today on the S&P when it pulled back below that range here for this morning. So keep that in mind if we start going sideways here. That's kind of the only real variation of this, right? If we went sideways in the range, we pop up, buyers once, buyers twice, crown reversal, into that first test, same thing, right? No worries there. That's a great trade right there, right? Crown reversal, into that first test. Again, we've talked about that plan already, right? So execute that plan. Remember, tomorrow morning, we're going to trade this stuff together tomorrow in the trade room, 8 o'clock Eastern time, right? So be there with me. All right, let's keep this party going. S&P looks pretty cut and dry here for tomorrow. How about over on the NASDAQ? NASDAQ's pretty interesting. Very similar to the S&P in the sense that we have this strong run up. Anytime we see a real strong move in one direction, we know the odds are very good that the buyers are going to find some level of support, like a prior swing. They're going to find some level of support, like a bull channel, and they're going to try to buy that pullback and retest the high. So just like the S&P 500, the NASDAQ, we are definitely bullish, but we're in decision time, right? Where do we go from here? Do we keep on going higher? Right, into that measured move? Do we fade off that high into a buy back up? Or do we start to dump, right, go back into that range magnet down below us? A couple big differences, though, here on the NASDAQ. The NASDAQ really does not look as easy going higher right now. You can see two big reasons why. One is that big, well, I guess not that big, right? Narrow but very, very long-term range there from late last week. Remember, these pendulum swings, the amount below the range equals the amount above the range. That area is a major area of support or resistance. In this case, it's a level of resistance. We're going to talk more about these pendulum swings on the oil chart, so you better keep watching tonight, because I'll tell you, pendulums are one of the kind of the hidden, secrets of trading range-bound markets. They really give us good targets, they give us good entries, and they do a pretty good job of confirming big breakouts as well. As you can see, though, we're running right into that pendulum swing right now. Not a very easy place to want to get long. Right? Now, if we had gone up, right, and we're still trying to get there, then yeah, I would say buy it. But again, we now have the move up. We've pulled back. They've retested the high. There's no sense of urgency right now. There's no unfinished business right now. The only unfinished business right now would be to finish off that measured move, and that's kind of the third thing we got going on right now, right? Market opens up, we get one leg, get that big middle second leg. That third leg is very, very often a page from Elliott Wave, right? I don't use a lot of Elliott Wave, but this is one part of Elliott Wave theory that really does apply very well to today's markets. I do not recommend going out and watching all the videos about Elliott Wave and reading all the books and getting all the expensive scanners and crap like that. Trust me, if it was worthy of short-term day trading, I would be talking all about it, but it's not. It's very few pieces of Elliott Wave that really make sense in today's markets. This is definitely one of them, where you've got wave 1 is usually often very symmetrical to wave 5, right? There's 1, 2, 3, 4, 5. So anyways, long story short, that is another reason why I would be very careful here as a buyer going higher. So you can see why the S&P is a little bit easier for those buyers, right, going higher here. So that's all right, though. We could definitely still buy this. We could definitely still buy it. We just have to have the right setup, right? That's the key right now on the NASDAQ. The buyers, of course, right, they want to complete their objective up to that measured move. The buyers would then love to go up and take out the all-time high. That's probably the one thing the buyers have, well, besides all this bullish momentum right now, the buyers have, some FOMO. The buyers right now, they're watching the S&P, beating their chest at all-time highs right now. The S&P hit the all-time highs. It seems like the NASDAQ's going to have that little bit of that carrot at the end of the stick right now that might want to drag it higher. That, of course, we'll talk about here in a moment, how to trade that if we get some melt-up stuff here, going back to the all-time highs. So the buyers definitely have some definite objective overhead. The bears have one thing on their mind. The bears want to get back into that range, oh yeah, and they want to definitely go back and to take out some of these lows, right? Because we've seen a lot of buyers continuing here to buy the dip. It doesn't take it doesn't take a lot of effort to look at that big picture chart and go, you know what, that might be a little bit of resistance up there. You could definitely see, right? The bears may have a field day on this tomorrow. Again, we're still pretty bearish right now, right? We're still pretty bullish right now, but this could easily turn, and we'll talk about how to trade that turn here as we go. So again, we're definitely bullish right now. How would you buy it as we're going higher? How would you buy it as we're going higher? Momentum is fine, but location's not that great, right? Location's not that great. It's just, there's a lot of resistance levels here we have to crack here overhead. How would I buy this thing as it goes higher? Well, real quickly, let me get rid of this channel here for a second. There are, obviously we can go the easy route. We can always go with the classic 1, 2, 3 breakout. I talked about this on the S&P, right? Mark the high, mark the low, drill down to your faster time. Again, this is a 4,000 tick chart right now, right? Drill down to your faster time frame. Find those traps, find those failures into pullbacks into strength. Again, I cover all of these entry setups I'm talking about in that quick start class I mentioned before, right? That's a pretty easy one. 1, 2, 3 breakout. Another one, because we have that FOMO going on, I'd be very curious to see something like this, where you get like a breakout and a grinder. Okay, and we talked about these last week a lot, right? When the market was melting up. When the market kind of melts up like this, what you want to do is you want to grab that channel off the high, bring it right down to that low, find that trap, and grab that first test. Now, this oftentimes sets up into a really nice trade, right? Let me get a little bit zoomed in on this so you guys get a better picture of it, right? So to go higher, how do we buy it? Again, let's say it pops up here, but instead of getting that 1, 2, 3 breakout, it starts to grind. When it grinds like that, what I like to do is just grab that channel top, find that bottom, find a location where the trap lines up with the channel low, wait for that trap, and oftentimes, guys, it goes from a trap into a failure, into a pullback, into a strength move. We may not get all 4 of those, right? But trap, failure, pullback, strength. Again, you'll see a lot more examples of that in that free class I mentioned earlier. But that's how I would trade this thing, right, as it goes higher. Another breakout pattern. You ready? Another one. Now the bulls really kick into gear, right? Strong pop-up. Real strong pop-up. It feels like we're never going to stop. Shallow pullback, higher high in price, trap. Very simple breakout pattern. In fact, one of my favorites, we saw a lot of these last summer. Well, I guess this summer, right? A couple months ago, right? A lot of these in the summer. Now, would a channel hurt, right? Would that hurt? No, it wouldn't hurt. It's just we don't need one. You don't need one. You might find a channel there if, maybe there's a channel, but we don't really need one. So strong punch up, right? This is how you qualify it. Strong run up, shallow pullback, higher high in price. Okay? Say it with me. Strong run, shallow pullback, in this case, higher high, traps, baby, right? That's a great setup, an easy setup to learn. The key is it's got to push, right? It's got to push, okay? Now, again, this could also be the same thing as the S&P, right? The pop and the pullback, right? The pop up, we get underneath the moving average, the bears try to get short, right? So I'm not going to, we have these options also, failure, pullback combination. I talked about that on the S&P, right? So same breakout patterns on the S&P can really work pretty well on the Nasdaq. But I think the one I would really like to get is I'd like to get that pop up, that grind going higher, right? That kind of runaway, melt up market. Find that channel. Try to line up that trap, that failure, that pullback combo, or that jump, right? And that two-try trap. Anyways, those are the setups I'm watching for as we go higher to be a buyer on this. How would I be a seller on? How would I buy it if it goes lower, right? If it goes lower. Now, we may see a range here, okay? So you definitely do want to kind of keep an eye on this here overnight. If we start seeing a range, we talked about some of the traps you'll get into with a range, right? With that falling resistance, okay? So just kind of be aware of that for tomorrow. But if we end up running lower here, you have to think there's going to be some trend line down here, you know what I mean? Like some expanding triangle. You have to think that if the buyers reject these highs and you have all of this momentum right now, you have to think there are more buyers probably waiting right down here. The problem's going to be is momentum. So we're going to have to use that momentum against the bears. Let them try once, let them try twice. Really, ideally, take out that low. Take out that recent low. Make those buyers get back in, basically, right? Think about it. Anybody who bought that sharp pullback, okay, their stops are probably right below that low. Okay, make them get back in. That's the reason why I want to take the low out, right? You want to make them get back in. You want to make this thing, stop them out, and then have them watch it fail, and they go, oh shoot, I'm not going to miss this thing. I'm getting back in, right? And they're going to help you run this thing right back up to retest the highs again. Okay, trade the failure and then trade the turn, right? Trade the turn. Again, I'm not going to drill down to the faster time frame right now, but we will tomorrow. We'll drill down, we'll find that new channel, and we'll trade the turn for that retest of that high. Okay, so again, deep pullback, trap in those bears, use those two-try failure patterns we talk about in that quick start class, and then whichever entry pattern we get off of that low. Maybe it's a trap, maybe it's a pullback setup. We'll know more once we get there in real time tomorrow morning. All right. And then again, like I mentioned earlier, keep your eyes on a range, right? Obviously if it just pulls back, it's not a range. If it starts going sideways though, that's when you got to worry about, stuff like this. When you come down, there's a trend line, you know what I mean? Again, similar to what we saw today in the trade room, we got the 1, right? The 2, remember rope in the bears. We still want to use the 2 tries, right? Still use the 2 tries, still get some support levels taken out. But now make sure we're getting in either off the trend line, right, or into those stops for that, right, for that failure. That's always one of the tricky parts about a range. Not always, but sometimes there's a trend line coming down. So make sure you're aware of that and use that trend line to your advantage rather than just simply, buying into it and taking a loss on it. All right. I love those buy setups. How do we sell this thing right now? How do we sell it? Well, we're at a great spot to get short. We really are. Our only problem right now is momentum. Yeah, momentum's a big problem for those bears right now. And of course, some FOMO. I think FOMO is definitely going to be something to be concerned with. I would really like it if this pendulum swing had been taken out already. Like it would go a long way with me if they could take out that pendulum. There's a good chance though. Maybe the range is right there. I don't know, right? It might be a little bit different, calculation. So one thing about pendulums is they're very, very reliable, but you want to think of them almost like a range. You know what I mean? Not like your typical range, right? But, like a zone, around that area. For all I know, maybe this range is different. You know what I mean? It's been a while to draw that range here. So I think we're close enough probably right now. But the reality is momentum is definitely going to be a problem here. How do I sell this thing back down? Crown reversal, right? Trade that turn. Yeah, absolutely. We talked about this in the S&P, right? Buyers try once, buyers try twice. I would really like to get that trap, trade that trap. And again, speaking of traps, you can almost always find a good follow-up entry with a trap on the way down, right? So trap high, we call those bull traps, right? We pop up. Again, we're very bullish, right? So we have to respect the bulls. Let them try once, let them try twice. Get that trap off the high, right? Get that trap off the high. And then, of course, as you roll down, trade the turn. Don't chase it. And, I'm simply drawing it right now. This is a trap entry. But honestly, a lot of times it'll pull back even a little bit further like this. It'll get above the moving average. It's not a good trap signal, but the buyers come in, they try to buy it. We can now look for a failure, right? And we can sell it back down from there. The key is we're looking for whatever entry setup qualifies based on the rules we talk about in the video classes here to sell off the high of that channel. All right. And then again, we know that range is the magnet as we go. I think you can probably also do the same thing as we go higher. Just be aware, though, if it really pops and runs higher, I wouldn't force it. But, if they keep going to that measured move, they'll get the measured move there, the buyers once, the buyers twice. Yeah, I can definitely justify that because, again, you're up inside level of resistance. What you don't want to do, though, is you don't want to fight a real strong push. If it really pops up like that, not my idea of a good short. All right. But, if it pulls back, they try to go higher. They struggle once, twice. Yeah, you're in a right spot. There's not a lot of what we call explosive breakout momentum there. That'll still be a pretty good short there off that high. How do we trade if it drops, right? If it drops, I think the same thing can apply as we talk about going higher. I think a two-try trap would be a fantastic trade short. And in fact, if I had it my way tomorrow, probably what trade I get, right? Two-try trap. Again, strong move down, shallow pullback, barely touches the moving average, ideally misses the moving average, lower low in price, and a trap, right? Two-try trap pattern. The key to this setup, again, is the strength of the first move, the shallow pullback, the lower low in price, and that trap. If I can get a channel, then absolutely fantastic. I don't need it, though. If it really drops off that high, shallow pullback, lower low, that trap is a great, great short, right? Don't miss it as we go. Or if we roll lower, we start to kind of grind, right? Draw that low, find that high. There's your trap. There's your buyer failure. There's your pullback combination, right? As we go. Again, that will be a great trade. Okay, even with the range right there. If it runs lower and grinds, there's been no deep pullback yet. Everyone's going to short that first pullback. Everybody will, right? Because the writing's on the wall, right? Going back to that retest, that low down there. That's an easy way to short this thing as we go. All right. So again, plenty of ways to do this. We'll see what we get. Again, if you're watching this video right now, I assume you're like me and you're a trader. If you're a trader, we trade what the market gives us. I could care less what direction this thing goes tomorrow. Probably even easier if it goes lower, to be honest with you. But, again, my job is not to predict. My job is to react and take whatever the market gives me here for tomorrow. All right, over to the oil. Almost said the gold here tonight. I have to get my intro in check here. Over on the oil here right now. Oil, of course, $85 a barrel, right? Almost back to triple digits. A ton of volume right now in the oil market. I had been, if you guys know me, I traded oil exclusively for the first number of years of my career. We did really, really well on oil, but then for a couple of years there, it completely went to sleep on us, right? Really narrow ranges, got knocked down to 40, $45 a barrel for a while there. We definitely have seen some more reliable setups. I do watch it every day. We've seen a lot more reliable setups recently here, so I thought, all right, let's give the gold a break here. Gold definitely is a bit grindy right now. We'll focus here on the easier stuff here on the oil market. Over on the oil, honestly, I could cover this stuff up right here. It wouldn't even matter. It wouldn't even matter, right? I could cover all that up and say doesn't matter. A chart is a chart is a chart. Now there are some tendencies. For example, oil has rollover on the 18th of every month. So you want to know that. Oil loves 10-cent moves and $1 moves. There's a little, so there's definitely going to be some personality traits about oil, right? Again, 18th of the month, oil loves the 10-cent moves, the $1 moves, things like that. So, there's definitely some personality quirks to it. But for the most part, though, this could be any other market, right? It just happens to be the oil market here on a 3,000 tick chart. At first glance, it looks like oil is a beautiful short right now because, of course, we get that strong run up and it turns over and rolls, right? At first glance, you're like, oh, this is easy, right? Let's just short this thing. We have, in the bigger picture right now on oil, we have this big monster range down here. So there is no doubt about it. That's where the bears want to go. The bears want to go back into that warm, cozy range down there where they can just roll around, right, and all that bearishness, right? So they're looking for that range to be the magnet for the bears. The bulls, of course, they have that strong run higher. They want to retest those highs, right? And of course, go back up and retest that range or retest the range rotation. The biggest problem we have right now, and kind of the reason why I'm not quite convinced yet to short this thing just yet, is because of the range right in the middle. This range right in the middle, we basically broke out into a trading range. We popped up. The buyers, of course, tried a few times, and we're going lower here. The amount of the move above the range is equal to the amount of the move below the range. Okay, that creates a very important area of support. We also can see there's an expanding triangle low, expanding triangle high. So we basically, in a nutshell right now, we have a bull market into a trading range. We have quite a bit of momentum as the bears have rotated off of those highs, but make no mistake, we are still overall bullish. We've got a lot of support levels to work with, most importantly, that pendulum swing. And so right now, the bulls, they want to trade this turn. They want to trade this thing turning, going back up, right? Trade that turn and make that run back up to retest the high. This is a pretty easy plan of attack. And I'll be very clear, if we were a little bit lower right now, I wouldn't be thinking about being long on this, right? If we would have broken the pendulum swing and really started to grind down, this would definitely be a short seller's market. So how do we buy it? How do we sell it? To buy it, you want to use that same two-try failure. Now, one caveat on this, you have to think there'll be a lot of bears looking to short this thing up around these highs. All right. If I was going to be a seller on this right now, that is exactly where I'd be looking for, because what is that pattern? It's a two-try trap, right? It's a strong move down. It's a relatively shallow pullback, not as shallow as it probably should be, right? But probably one important clue, and a lower low in price. There are going to be bears looking for it. So one kind of caveat here for me is I'm going to want to see one of these two tries get at least up above that 84.18 area. Right? Show me that those bears are already in. And then what I can do is, there's a lot of variations on this, okay? So for example, we talk about the crown reversal, the 1-2, and how we see a trap on this. That's always a great way to do it. Bears try once, bears try twice, a trap on it. Traps are really reliable because you're buying as low as you possibly can. The bears are already in. All their stops are right above the highs there. That's an easy way to buy this thing back up again. Another one is going to be, let's say we go back up, draw that trend line now, and then grab off that trend line. See, at this point, we've already got that move, and they've already retested the low. Okay, we can get relatively aggressive. Relatively aggressive after that second try. Okay, 1 try, 2 try, and I'm buying off a trend line support. Okay, a couple different variations of it. The one thing you got to worry about is when you get something like this, where it goes 1 and 2. Because now that trend line going higher now, you're no longer buying low anymore. You know what I mean? You know, on paper, that is technically a 2-try failure. But this is a good example of where not every example of a failure setup is worth our time. That's one you want to skip. If you do see it start to get vertical like that, wait for that trap. Okay, because traps, of course, are going to help you avoid that problem, getting in too high up. Okay? That's always kind of an easy rule of thumb. If the trend line is really steep, skip it, look for a trap. If the trend line is relatively flat, take it as a failure, okay? If we do get that failure, 1, 2, as I mentioned earlier, now we've got the rotation. We know the buyers want to go back up and take out that high. As we see the market rally higher, we then go out and we draw it up like this, right? We find that new channel. And again, we're trading the turn. We grab our failure off the lows, roping in those bears. Then we mark up that new channel. Can I get that trap? Can I get that failure? Maybe a pullback combination and finish off the turn. We trade the failure below the range at support, this time with a 2-try failure because of all momentum. And then we trade the pullback. Again, I say pullback, but in all reality, it's whichever one of the setups we get. And again, failures, traps, pullback setups, you'll see quite a few examples of those from our favorite markets, crude oil, S&P, Nasdaq, gold, in that quick start class linked up in the upper right-hand corner. Buyers want to go back up, right, and retest those highs. Now, that's the way I want to buy this market for tomorrow. How do we sell this thing right now? I really can't do much with this short. I can't do much with it. We're not there yet. I would love to tell you there's some magic indicator that would tell you, X-ray the candlestick and it tells you when to short it there. It's not going to happen. What we're going to do is we have to wait for more evidence. So how do we sell it? We could go all the way back up, right? Take out that high, crown reversal, 1, 2, crown reversal, 2-try failure off the high, back down, and trade the turn. That is an easy way to make money selling this market right now. Wait for the retest. Wait for that pendulum swing to be retested there. Take out those highs. Buyers once, buyers twice. Again, because we're so bullish, you want to wait for 2. Okay, ideally get that trap, maybe a trend line instead, right? Grab the short there, and then again drill down, grab a short off the high of that channel. If we roll lower, right? If we go lower, do we grind lower? Do we grind lower? If we grind lower, what do we do? How do we trade that? We mark up that low. We find that hidden channel. Yep, we find that trap. We grab that trap, that failure, that pullback combination. Right? Again, you'll learn more in the video class, right? Trap, failure, pullback, combination. Do we just punch and run lower, right? We punch and run lower. Strong move, shallow pullback, lower low, traps, baby, right? That's a great, easy money trade. It's a must-take trade if it pops and runs lower, right? Or maybe we get something like this where it rolls down. We find a new channel. Right? We drill down. We get above the moving average, roping those buyers, right? From there, that'll work. Okay? Sometimes it'll drop, right? It'll drop really, really fast. It'll pop back up really fast. Get that breakout pullback. Again, you can see there is no shortage of these variations. It's kind of the best and the worst part about trading. Once you learn all these combinations, I don't want to say bulletproof, but you're almost bulletproof. You learn to keep your emotions under control. You don't force trades. You don't take revenge trades. You stay within your rules. Again, I'm going to give you a checklist, right? I'll give you a full checklist, and we'll work those rules together, right? And we'll do it tomorrow morning in the trade room. All right, guys? Speaking of tomorrow morning, got a good plan of attack here tonight. But tomorrow, it all boils down to execution, doesn't it? It all boils down to execution. I can talk about it all I want. Tomorrow morning, though, we're going to execute this plan correctly. We're not going to force trades. We're going to stay patient. We'll do our mental prep like we always do at the beginning. And hopefully, I'll see you there tomorrow at 8 o'clock Eastern Time. I'll put all the membership links, all the important stuff in the description of the video tonight. If you like this video, hit that like button. Make sure you subscribe and get registered. I'll see you tomorrow morning. Opening bell, 8 o'clock Eastern time. If not, I will see you guys and gals tomorrow night, and we'll do it all again. We'll get a lot more action coming this final fifth week, I guess, of the month of October. But that's it for me tonight, though, guys. Have a great rest of your evening. Thanks for tuning in. We'll see you tomorrow morning. If not, you better come back and see me tomorrow night, and we'll keep this party rolling. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.